Well, hello and welcome to the Herald's webinar to discuss the results of the budget that was announced yesterday by Rishi Sunak. I'm delighted to be joined on the panel by the Herald's business editor, Ian McConnell, and by two members of the team from Johnson Carmichael. We have John McCausland, who is the tax partner, who's at Johnson Carmichael, and we have Peter Natini, the financial planner from Johnson Carmichael Wealth. So welcome along, everybody. Thank you for joining us today.
Thank you.
Thank you for having us.
So we've all been paying attention very closely to the budget. First of all, what would you say were the top lines? Would you like to start us off, John?
Yes, well, thank you very much. The top lines, some of those have already been announced pre-budget, and it's the extension of the support schemes for this pandemic, and having those extensions through to the end of September is something that allows people to plan, and it's beyond what we're expecting the lockdown to be. So the planning for those have been very welcome.
Excellent. And what about for you, Peter?
From a financial planning perspective, certainly the tax thresholds or the freeze on them that's been announced is quite pertinent for a lot of financial planning aspects for readers of the Herald. So that'll be quite interesting to talk about those in a bit more detail shortly.
Excellent. And Ian, you've been knee deep in this for a number of days now. What about you?
Yeah, I think I suppose on the kind of hopeful sense, I guess the faster recovery that's projected in terms of regaining sort of key pandemic levels of output, and also sort of crucially in that front the lower peak in unemployment. Obviously, in terms of sort of John's area of expertise, the sort of corporation tax move had been well trailed, which I just say John will move on to shortly.
No doubt. Were there any surprises for you? Did any of the announcements make you go, "Gosh, wasn't expecting that," Peter?
I think there was a lot of rumours beforehand about what might or might not come out. I think one of the ones for us was the potential for capital gains tax rates to move into line with income tax. That was income tax rates, which would have been a big negative for us for investors and savers. So that didn't happen. So that was a nice surprise, shall we say?
Excellent. And what about you, John? Did you think, "Oh gosh, wasn't thinking that would come"?
The one that was a bit of a surprise was the super deduction for capital investment, and again, that's something that we can talk about a little bit later. But that is fantastic in terms of encouraging businesses who have done well during this pandemic to actually spend a lot more money and then to spend that faster. So that's one of the surprises.
And Ian, any surprises where you were?
I think, like Peter and George said, I think a lot of stuff had been quite well trailed. The corporation tax, particularly, I guess we didn't. The 25% maybe was a bit higher than had been projected, and the timing of it hadn't been particularly well disclosed. The investment reliefs, I think, in some of the small company stuff had been, but the personal allowance, obviously, sort of Peter will come on to, but I think as well as the kind of higher rate sort of threshold in a kind of ex-Scotland kind of rest of the UK context, the freezing of the personal allowance for such a long period, I guess, was interesting. And the rise for this year is going through, but it's going through at a kind of lower inflation rate, I guess. So it's interesting to see how that pans out in future years.
Yeah.
Well, let's look into the detail of it then. So, Peter, if you're talking to people who are thinking about their wealth, their investments, their savings, what would you tell them about the budget? What's changed for them?
I think one of the main things that we noticed was that the pension lifetime allowance has been frozen. Now, the pension lifetime allowance is the total value of all pension funds that an individual can hold before there's a tax charge on the excess. So that currently is just over £1 million. It's £1,073,100 for 2021, and that was due to increase with CPI, Consumer Price Index, which is roughly by about £6,000, just short of £6,000 next year. But the Treasury's frozen that, or the Chancellor's frozen that, so there won't be that increase. So I think it's predicted to save the Treasury about £250 million a year, roughly, with this freeze. Now, any increase in line with CPI is to be welcome. However, that's now not going to happen, which is slightly disappointing. I think a lot of savers for retirement need consistency and continuity and certainty, and there's constant tinkering with pensions going over the years. Not long ago, the lifetime allowance was 1.8 million. It was reduced to 1 million, and it's come back up slowly. So that's a bit disappointing. And there's that many individuals that we find have pension funds approaching or above the 1 million limit that are now seeking advice to how to mitigate and what actions to take. So what I would say to them is that if you are approaching that limit or you're above it, seek advice as to what your projected fund might be if you are impacted on it.
And from your point of view, John, what was the detail that you are most keen to tell the people that you work with?
I think when you look at the way the Chancellor set out his budget, he had it as setting out, we're going to protect jobs and livelihoods, and then he was going to strengthen and fix the public finances. And one of the areas that he's looking to do that in terms of fixing the public finances is to increase the corporation tax rate from 2023. There were rumours that it was going to increase, but as Aidan mentioned, going up to 25% is quite a jump and higher than what we originally anticipated. Now, that increase is going to bring in about 47 billion to the Treasury over the next 3 years beyond 2023. But smaller companies, those who have got profits of less than £50,000, will remain at the 19%, and it's only those that are got profits over £250,000 will they start to pay tax at the 25% rate. The 25% is actually quite a low rate compared to the rest of the G7, and you're actually looking at the rest of the developed world. The UK was actually starting to be seen as a bit of a tax haven, so the fact that it's actually going up to 25% actually might help encourage some of the larger businesses globally to invest even more through the UK.
That's good to hear, yeah, and good that he's protecting smaller businesses as well with their different thresholds.
Indeed.
Yeah. Ian, reckon our readers will be happy with that?
Yeah, I mean, I think the smaller company reliefs are, important. Obviously, up to quite a high, a relatively high level of profit, I guess, and kind of, by the time you get to the 25%, I think the other point that was made was that this, which is an obvious point, I guess, that it wouldn't hit struggling businesses sort of limping back after the pandemic, because it actually, it obviously applies to profits. It's the nature of the tax, which is a very obvious point, but one that was kind of made by the Chancellor. So I think, some of the investment reliefs that are in there look quite interesting as well. And so I think sort of, by and large, I think given the context and where we'd gone after the previous crisis, and where we go after this crisis, it kind of in some ways looked like a kind of obvious area to go for. And as John says, that those numbers are very big in terms of revenue raising. But obviously, so I think that's kind of important.
Yeah, and extending the furlough scheme, that was something we were all hoping for. It's extended until September. Do you think that's long enough?
I think I've been writing columns for many months since the onset of the pandemic saying it should be extended for, a kind of a long period. And I think there was a problem through summer and autumn with a lack of visibility up to the previous October 31 deadline. The announcements were made kind of, on October 31, I think, and then sort of early November, and it was kind of too late for a lot of employers, albeit there was some sort of retrospective provision. But so I think since then there's certainly been an improvement in terms of visibility. Based on the roadmap, September looks kind of reasonable. I think the one thing we probably need to keep in mind is that, like last summer, you're sort of seeing an increasing employer contribution there as well. So you've got like businesses in hospitality that are already, although the taxpayers funding the kind of the salary element, they're paying pension and national insurance contributions, often with no revenue coming in. And then they're obviously going to be asked to make sort of a contribution on top of that from July, and then increasing further. So that it'll be interesting to see exactly how that pans out. It's certainly in principle it's good that it's been extended out till then to give a bit of visibility beyond this kind of I suppose the likes of the midsummer date that's been talked about by Boris Johnson. I think.
Yeah, and it does seem that unemployment's going to be lower than was projected. John, do you think that's as a result of extending the furlough, or do you think that's all the package measures together?
I think it's a combination of all the packages, and it is a combination of the fact that we've been able to have a vaccine rollout, the fact that there's a good outlook, there's a better outlook, there's hope, there's daylight. So it's a combination of all those packages. I have to say, I do agree with Ian there, is that it'll be interesting to see what happens in July. Yes, employers are going to be asked to contribute 10%. But but then it'll move on to 20% when it comes into August and September, and exactly how many are going to take that up, particularly in the hospitality and tourism sector. The good news for that particular sector is around the VAT and the fact that the 5% has been extended. Personally, I think we would probably prefer for that sector that 5% would be made permanent, like elsewhere in Europe, but it's something which it's been taken into consideration, and it's going to go up next year.
And obviously this is a UK-wide budget, but it was very clear that he was speaking to all 4 nations. So what does Scotland get out of it? Peter, what were the sort of Scottish highlights for you?
But I think obviously it's he's making a big play on the union and the strength of the support that the government's given, and I think John will probably list that in terms of the Barnett formula, there's going to be more money distributed among Scotland. He mentioned about the Freeport areas. He mentioned the 8 sites it was in England, and there's going to be some communication with the Scottish Government as to what the locations might be in Scotland. So again, John will probably pick up on this, that could be a big boost for the Scottish economy.
Yeah, I think the policy measures that have been made today, I think what they're saying is about the Barnett formula, an extra 1.2 billion being attributed to Scotland, and as the Freeports, that's something that's going to be discussed with all the devolved nations. 8 are going to be in England, and how many and where they're going to be in Scotland. The other things that they've mentioned today which will impact Scotland is like of the Aberdeen Energy Transition Zone. There's £27 million being attributed to that. There's an additional £5 million to the Global Underwater Hub, which looks at the underwater engineering. And also they're looking at accelerating the growth deals for Ayrshire, Argyll and Bute and Falkirk as well. So there was a lot of mention about how things have been approached from a UK perspective and how the UK Treasury has supported it, and there was particular mention to Scotland in those areas.
Ian, would you say that was a very deliberate ploy to get everyone on board?
There certainly was, sort of, I guess, quite a lot of kind of political messaging in it, sort of, accompanying the measures kind of things. So yeah, certainly it was something which kind of was to the fore, kind of, especially towards the end, as I remember. But yeah, I mean, I think it's I think that's interesting. I suppose one of the kind of big measures is the freezing of that 50,000 higher rate threshold, which is obviously different in Scotland anyway, a lot lower in Scotland. That's a kind of differential that's kind of emerged, with kind of devolution and sort of decisions taken on that.
John, just to go back to those Freeports, could you explain exactly what those are and why they're possible after the Brexit?
Well, Freeport areas are those ones that are seen elsewhere in the world, and what it does is it helps investment being brought into, and it simplifies some of the procedures that are made. So what can happen, and what they're earmarked in the likes of the rest of England, are things where the buildings that would be made in those particular areas, you get special tax relief there. The regulation will be simplified, and there'll be incentives, particularly around council tax and those particular areas. So it's what to try and drive investment in those areas, simplify trade, and also make sure that things are deregulated to a certain extent and making it a bit easier for everyone. Just something that wasn't particularly possible where things were when in our existing relationship, but it's something that's trialled elsewhere in the world and works reasonably well.
Are you excited about these, Ian? Do you think these will be popular in Scotland?
I don't know. I think the jury's out. There's obviously been, post-Brexit, there's a lot of talk about a lot of trade stuff from a political perspective, and I think the kind of proof of it will be, when they happen to have seen these kind of facilities, sort of, elsewhere in the world, kind of thing. Obviously, in terms of scale and stuff. But it's, I think it'll, it remains to be seen how much difference it makes. And obviously, there's still a lot of focus on the kind of immediate trade problems that a lot of seafood industries having, engineering's having, the rafter sectors, which probably for me currently kind of overshadows the Freeports, albeit that is obviously something that's been sort of looked at. So it'll be interesting to see how that develops and what it yields.
The other thing, there was a big mention in the budget about the extension of the stamp duty holiday. Now, obviously, we don't have stamp duty as such in Scotland. We've got what's the name of the tax?
It's Land and Buildings Transaction Tax.
That's it's so easy to remember. A really pithy title. we just call it the Scottish stamp duty occasionally. Does that have as much effect here? Because it certainly wasn't as much savings up until the budget.
It remains to be seen what action the Scottish Government take. Now, the Scottish Government had an extension up until the end of March, and it wasn't going to be extended in April. But again, we've seen in the past they tried to align that particular tax with on properties as close as they can with the rest of the UK. So that might be something that changes over the next couple of weeks.
Mm. And there was good news for self-employed as well, because I know they've been upset, shall we say, about not always falling into the right categories. What's new for the self-employed this time, Peter?
Well, I think certainly what the Chancellor said was that those that have filed a tax from midnight last night, I think it was, will benefit from being able to make a claim for support where previously they couldn't. I think you mentioned the figure was 600,000, so that's certainly to be welcome. That there'll be more support available for more self-employed people.
Mm. Yeah, John, are you looking forward to there being a bit more flexibility in that area?
It does help a lot of people. It addresses one of the gaps. One of the gaps that it hasn't quite addressed yet are those ones who have their own companies and some of their earnings are actually taken through dividends, and therefore they haven't been able to be supported in the same way, just purely due to the way that the calculation is made. So he's gone some way to help the self-employed, which is great news. So that additional 600,000 people that can make that claim, it's fantastic. But there's still a couple of gaps that could be addressed.
Hmm. And Ian, in terms of how he delivered it and the decisions that he made, did you feel like he made good decisions on the whole? Do you think he made bad decisions? What else could he have done, do you think?
Yeah, I mean, I think some of the presentation was obviously, we've talked about some of the politics in it already. I think the presentation of the public finances was, prior to the pandemic, was interesting in terms of the fact that the argument that austerity, there seemed to be a suggestion, had somehow helped, whereas public sector net debt had gone up from, I think, 1 trillion in 2010 to 1.8 trillion before the pandemic. So, that was kind of interesting. But I think overall, in terms of the measures, I think corporation tax was a kind of obvious place to go, especially, as I say, what had previously been done in the last crisis. The personal allowance, the higher rate thresholds, I think one for debate. There'll be, kind of mixed views on that in terms of the freezing of that, 50,000 for, the UK out with Scotland. Scotland's, I think, due to be, 43,662 or something next year. So So I think that there'll be a debate on that. I think the personal allowance, sort of freezing that, sort of increasing it this year and then freezing it out to 2026, that will actually hit quite a lot of people on kind of lower earners, and it remains to be seen whether employers might feel that they should try and compensate them in some way through pay rises for the the kind of net pay effects. I don't know whether there'll be any pressure there. It is one that, to be fair to the Chancellor, he did actually, unlike, on occasions when you see in some budgets, he did flag that it was like a real terms cut in the personal allowance. He didn't, he said that it would be, inflation would be a factor, but I think that was that's the one that kind of maybe looks as if it saps a little bit in aggregate demand in the economy and maybe just pulls a bit in growth. And, is that too early given we're trying to embed the recovery? I think that would be my kind of reservation. I think the corporation tax measures, I think by and large, although it is a big rise, as John points out, I think, the fact you've got the smaller company reliefs, the fact you've got the investment reliefs, I think is a good thing and helps balance that out a bit.
Mm. Sorry, go ahead. Were you going to add something?
Yeah, I was going to add there is one of the other things in terms of with corporation tax, the Chancellor's extended the ability to carry back losses. So if a company makes losses in a particular year, they normally can carry it back 12 months and seek a repayment for any tax that they've paid. What he's done is he's recognised that this pandemic's really impacting businesses in the longer term, more than just 12 months. So what he's allowing businesses to do in companies is to carry back losses for 2 years. What that allows companies to do is to reclaim some money from the Treasury and then reinvest that again. So again, going back to this, an investment-led recovery, he's providing the levers to allow businesses to generate some money to reinvest in their businesses as well. So that's one of the areas that I think was quite good. And overall, that's a cost neutral scheme to the Treasury. It'll pay out about 800 to $1 billion in the first couple of years, but then it'll be recouped over the next couple of years afterwards without really businesses seeing any difference other than the fact that they're getting money up front.
Helps with cash flow, I suppose, which is so key at the moment.
Incredibly important, yeah.
And then there was that astonishing announcement about super investment. Could you talk us through that, please?
Super deduction.
The super deduction, again, that's gone back to this investment-led recovery. You'll get 130% deduction. And again, what that's doing is those businesses who are still doing particularly well, who have got cash to spend, it's allowing them to benefit from spending, and it's maybe incentivizing them to spend sooner, quicker, and a little bit more. So again, one of those areas, that's going to cost the Treasury about $24 billion over the next 5 years. So again, when you see in one hand that the corporation tax rate has gone up, there's given the incentives to actually bring that cost down if you invest, and that's what the targeted measure is made, is to make sure that investment is being prioritised.
Do you think that will apply to many businesses?
Absolutely. When you looked at the annual investment allowance over the last couple of years, when the allowance was just purely getting 100% deduction for £1 million, many businesses benefited from that and actually improved and increased their investment in capital expenditure. This one just goes to quite a step further, and I would expect a lot of business to take that out. Absolutely.
What do you think, Ian? Do you think it'll be well received?
Yeah, I mean, I suppose it's a time when there's plenty of losses around, sadly, but it's I think it is a big deal. It's kind of looking at that. I suppose it addresses that issue about what is done in the short term in terms of trying to propel a recovery will be very important. As John said, the amounts of money that's costing the Treasury there are big. It's a big measure. It's obviously it's for a period kind of thing, but an important period to try and kind of embed a recovery.
So if to think about savers who've kind of had a rough time recently with interest rates being so low, Peter, what do you reckon going forward? Do you think they're going to be happy? Do you think they're going to be better off?
Well, a couple of things. The Chancellor made reference to a green retail bond, which I believe will be available through National Savings come the summer. So we'll look forward to more detail on that. Obviously, interest rates are at a record low just now, and anyone with cash in the bank is really feeling some pain. So anything that offers an attractive rate of interest is to be welcome. And I think with the terminology green retail bond, it maybe gives savers an opportunity to take part in tackling climate change with their money. So look forward to that. Obviously, Ian had mentioned earlier on about the personal tax thresholds being frozen, and he quite rightly said that that would hit certain people. We all look forward to the personal allowance increasing every April and a few more pounds in our net pay packet. That's not going to happen this year. So the Chancellor's frozen the personal tax threshold, is frozen capital gains tax rates, is frozen the things like the annualised allowance, which is 20,000. We're coming up to the end of the tax year, so we're about to trip into a new tax year, a fresh 20,000 limit. So 20,000 for your generaliser and 9,000 limit for a junioriser for children. So they've been frozen. I think we were quite aware of those already. From your readers and viewers' perspective, inheritance tax threshold has also been frozen. That's 325,000. And I think with asset prices such as property and investments increasing last year, despite the pandemic, these are impacting your readers and your viewers with these frozen allowances. So again, if you're at or round or above these allowances, then come and speak to your advisor or speak to us about ways to mitigate or take any opportunities that might be available.
It's interesting to hear you talk about green retail as well, because I felt like environmental issues were kind of absent from Rishi's announcement. Did you feel that?
Yeah, there wasn't much there, but certainly on over the last few years, I think climate change is on a lot of people's minds now, and how can they make a difference? And it's quite often when we're speaking to savers and investors that they are interested in climate change and how their money can make a difference. So certainly with investments, you're able to invest in environmentally friendly, or ESG they're called, environmental social governance portfolios. They're very popular with our clients, and that looks as if it's going to be continuing into the retail bond. So as I say, we look forward to that. What might be in the detail.
Mm-hmm. It is. It's the devil's in the detail. Are there any other details that you want to bring up, John, that we haven't discussed so far that have been announced that people need to be aware of?
I suppose there's maybe a couple of them. And first of all was going back to, again, the investment-led recovery, and it was the setting up of the infrastructure bank. And again, it was going to be capitalised with £12 billion. But what the knock-on effect was that the expectation is that there's going to be matched by about £40 billion of further infrastructure investment. So again, going back to that way of getting the businesses to spend money and people to invest money in those capital projects. And I suppose the only other one that has come out was the extension of the universal credit of £20 per week. That was extended. And again, whilst the job retention scheme and the self-employed schemes have been extended as well, I think there was an expectation that this is something that maybe should have been made permanent or actually extended a little bit longer, because those that are needing it won't feel any of the upside of coming out of the pandemic until much later. So I think that was something that was called for, particularly on the further questions after the Chancellor sat down, was is this something that should be extended a little bit longer or even made permanent?
And Ian, just overall, would you say this was a positive budget? Was it a fair budget? What's been your kind of initial reaction?
I think balance-wise, I mean, there was obviously meant to be a balance between sort of continuing support and then sort of looking ahead to what eventually happens with the public finances. I think, there's always a worry that, after 2010, there was a kind of focus in the public finances in a way which kind of seemed to ignore too much the top line in terms of revenue growth and the importance of that, and just sort of looked at, obviously public spending and so on. So I think it probably struck the balance. I think where the big take comes from in terms of the corporation tax side, looking at the last kind of 10 years sort of plus, it probably makes sense to go there. The personal allowance, I think, is maybe not the best thing to be doing right at this time. So it was I suppose kind of mixed. There was obviously good news on as John's alluded to, the vaccines given away to the Office for Budget Responsibility, now forecasting a sort of return to pre-COVID levels by the middle of next year, which I think is crucial. And the unemployment rate is looking to, is expected to sort of, peak at a significantly lower level, which I think is obviously crucial in terms of the kind of human, not only, obviously the human cost of of this in terms of the economic fallout, but also in terms of eventual recovery, and how quick that can be or how strong that can be.
And John, are you looking forward to speaking to your clients, or are you going, oh no, I don't want to have to tell them about this? What's your overall feeling?
I think the overall feeling is that when it comes to the corporation tax side of things, is that there's obviously some businesses have really struggled, and therefore they've got the losses. So there's the benefit of utilising those losses, and hopefully when we're coming through the other side, the impact of the increased rates are actually they would only feel the impact if they're actually being very successful. And therefore it could be really positive for them. A lot of the things were expected, and as we've heard before, a lot of it had already been released. But I think the capital expenditure, that super deduction one, is one where I think a lot of clients might get excited about.
Good. Well, that's been brilliant speaking to you all and getting your insight. Thank you all very much for joining us. We've got Johnson Carmichael's team. We have Peter Nattini and also John McCausland, and of course the Herald's business editor, Ian McConnell. Thank you all for joining us.